Hello and a warm welcome to another session of the CGMA Management Accounting Series. I'm Kukuletu Tsele. Now, as we start the series of looking at the CGMA report on business analytics and decision making, the human dimension, the range of data available to businesses these days continues to expand. Now, this report outlines how best practice in decision making is shifting towards an insight-driven process based on the rational interpretation and understanding of data. Joining us to discuss the best way of unlocking the opportunities that big data brings with it, I have joining me a panel of experts, commencing with Beth McGuinness, who's Associate Partner at IQ Business, Lineage, Managing Director of Accenture Digital South Africa, Johan Pretorius, Business Intelligence Lead at MTN, Philip Hatting, who's the Partner leading data and analytics for PwC SubSaharan Africa, and Verna Swanepoel, Director and Business Area Leader for Deloitte Analytics Africa. Welcome, ladies and gentlemen, and thank you so much for joining us. Not to forget that we have a wonderful audience as well, made up of industry experts in their own right and participants through SEMA, who will also be engaging with us through a question and answer session. Well, let's commence with the conversation, and a lot of it really is based on data and, of course, the interpretation and analysis of this information using the human element. But let's start off with the D word, which is the data, and how critical this has actually become in today's day and age. As we know, there are organizations popularly known as the FANG stocks, Facebook, Amazon, Google, and Netflix, who have made a business of establishing data and putting at the center of it all. Beth, let's start off with you with regard to the landscape and importance and critical role that data faces now.
So I think if we look back even as far as 10 years ago, we had companies were completely reliant on their own internal data sources. Whereas now, as people become more and more willing to share of themselves personally, or information is collected about individuals as they move through the world, there are much broader aspects of data that can be brought into the decision making spectrum that are starting to influence the level and the quality of the decisions that a company can make, not only about how should they manage their own business, but what are their customers expecting them to do, and how can they interrelate with those customers in a better way.
Lee, probably an unfair question. Is it the amount of data that adds to the competitiveness of an organization, or how it's actually analyzed and interpreted?
Well, very similar. It's how it's used. There's almost a quintillion amount of data being produced every day, and that's lots and lots of zeros. So the point is, in a world that has both structured data and unstructured data, what kind of questions can we answer as organizations to drive our very survival? So very clearly, it's how we do it and not the amounts of data.
Philip, I'd like to get your perspective on this. Given that you do have a focus on Sub-Saharan Africa in particular, are there particular nuances, though, despite the fact that Sub-Saharan Africa is painted with one brush, but elements that help you identify the differences and particular elements that differentiate particular segments in the market?
I think if you look across Africa, the need is the same. It's all about creating insight, the value from insight. So when we look across all the clients that we currently serve, the questions are more or less the same. Is how can they start generating more value out of those data sets? It's obviously the first critical part is that you need to start with the data first before you can get there. So it's all of part, joining that journey with them. That is very important.
Verna, I'd like to come to you here to get your perspective, and Johan, feel free to jump in too. But as you say, it's the data that stores all this information and plays a critical element here. But do we need to go 2 steps back, perhaps, in understanding how management accountants and individuals in organizations actually collect and collate this data?
Yes, absolutely. I think a lot of the challenge that organizations are finding today is firstly that they don't understand where the data comes from. They don't necessarily realize that ultimately there's a business process that generates the data. And even going a step further back, there's people involved. So it's not just about the technology of collecting the data. It's actually going all the way back and understanding the organizational dynamics around the business processes, the technologies we employ, and the people that ultimately run these processes, generating the data, and then moving to asking the question around how do we collect the data from a technology perspective, putting it into some sort of a central place where it becomes accessible, and adding the context to the data so that the management accountant or whoever the individual might be that wants to interrogate and interpret the data understands where it came from, what happened to it along the journey, and ultimately the context within which I look at the data.
Johan, would you agree?
Yes, no, I certainly agree. I think the main thing also is around a common data framework, so that everyone's got a common understanding of that data is an asset and it should be treated as such.
Is that the status quo at the moment, though, in various industries?
I think it is becoming the status quo, because the amount of information being generated through businesses, it supplies them an edge over their competitors if they treat the data properly, if they can harness the insights that they derive from the data.
Mm-hmm. Let's get then to the important element. We've painted a picture of perhaps how things do fare at the moment, but moving forward is the human dimension, which is the crux of the conversation that we're having today. Philip, if I can come to you to take a look again, perhaps at the status quo, are we paying enough attention to the human element when it comes to analyzing the data and information that's available, and where are we lacking? An open question as well to the panel.
I think it's a critical point to look at. Obviously data and the insights are going to trigger some sort of decision-making process, and that's always where data insight actually comes to manual part of it, where that actually interfaces. So it is quite critical to have a look at how decisions are being made and how it's actually being informed in terms of the data. We've recently conducted a survey and big decision on how that's actually been done, and it's very clear from that perspective that there's overriding manual decisions still being made. But I think technology, process, all of those things deliver the insights, but it's the human element that ultimately brings the uniqueness, the judgment, all of those different things to it, which is quite critical to differentiate and to create new, like for instance, influence business models, operating models, and so on for clients.
Mm-hmm. Lee, you wanted to add there, or Beth?
I think what becomes very important on the human side of it is, can people trust the data that you're putting in front of them? I think if you show them information that is completely against what their gut instinct is telling them should be the case within their business, you're going to have a situation where they don't believe the information. They will assume a mistake has been made in the way that it's been analysed, how it's been presented, some level of interpretation that's been applied. So really it requires your business people that are using that information to have absolute faith in the people that are gathering the information, to know where it's being sourced from, and to trust the processes that are responsible for managing it and making it available to them.
Mm-hmm.
I just wanted to add that, when you think about the people and what people can do, it's clear that we are much smarter than robots and software. The question is why we keep doing tasks that software could do for us. So part of the question I have, and it's very simple, is that we are doing the wrong things. Why aren't we using technology to help us industrialize how we collate and get the quality right, and spend the brain power we have on solving the outcomes that organizations need? Ultimately, what we don't want is more and more paper and more data sets. We actually want more outcomes that are very focused to the organization we're serving or the government we're serving. If we can drive value for citizens and consumers, that's where the game is at. So part of the question about what should management accountants do, fundamentally something completely different. Use the technology and become best friends with it, work hand in glove with technology as opposed to competing with it. And when you start to use technology for what it does really well, which is not take tea breaks, work 24/7, you can use a limited human power for what we do very well, which is think about the outcomes that Philip alluded to.
How do we get to that mindset though? Go ahead, Philip, you wanted to add?
So I just wanted to add to that. I think it's going to be less about how you collect the data, but actually how much more time you start spending about making the decisions. So there's definitely a shift more towards management accounts and reporting that needs to start generating more of those insights that's going to trigger certain actions that is going to create value for the organization. So it's 100%, it's all about less collecting the data and more about interpreting and generating some actions from there, which is quite critical, where the management accountant actually plays quite a critical role.
What's interesting though, Lee, and you mentioned that we should be using machines to do these menial tasks. And I certainly find on a daily basis almost that organizations have a fundamental challenge. They complain about the fact that some of their most expensive and most intelligent individuals spend the majority of their time doing these manual activities, collecting data, cleansing the data, massaging the data, and that they're not really spending their time on the insights, which is what most of them actually were employed for. And I guess one of the key challenges that one needs to explore a bit is, why is that the case? So clearly the technologies are there. We know the technologies are available, we know they work. What is leading to the non-adoption of those capabilities? Is it possibly a fear factor? Is it maybe that there's a new skill set that's required and the lack of that skill leads us to go back into our comfort zones? I think that for me is a very interesting question around how and why are we not leveraging the technology to really move us into the insight space and less so the manual activity.
I'd like us to delve into those, and you mentioned mindset as well as skills. Which do we need to tackle first, and how do we address them adequately to ensure as well that we maintain a global standard when it comes to enhancing the human element of the starter?
So I think one of the main mindset changes that actually has to happen is, as we start moving into this industry where it's not just about the business insight, it's also about the technical skills to be able to gather the data, and then just the knowledge of where the data exists, it becomes much more of a collaborative and a team effort in the way that decisions are made. So the first mindset change that has to happen is people have to start realizing that this is more of a collaborative exercise in how you pull all of the information together, make sure that you're utilizing the different skills that are used in collecting a large and complicated data set and presenting it back, and then being able to interrogate it in the correct way, and building that team way of working rather than just relying on a single individual to take the accountability for doing the process end to end.
And I think there's quite a big cultural shift that needs to take place as well, because you can't hide the facts in data, and that's going to automatically challenge the status quo. And are organizations actually open towards those sort of new ways of thinking and challenging them in terms of their current sort of form and shape?
Exactly, because that needs to start at the top, right, Lee?
Yep, maybe more controversially, what we do is more important than how we do it. We need to get over ourselves, right? And it's an important point. Our relevance in the marketplace isn't judged by how we do it, but what impact we make in terms of our key KPIs, whether it's EBITDA, revenue, whether it's market share. These are the key KPIs that bother our stakeholders. So if we're spending time on the inside, just doing what we always did, we're never going to drive our relevance. And specifically in a tough fiscal environment, we've got to change. So when you think about the what versus how, a few things come to mind. We need the sponsorship to get over ourselves. We need to promote teaming within organizations, break down the silos amongst the colleagues within the organizations, and open up ourselves for partnering. Why should you as an organization do something that industry has been doing for the last 10 years at a much cheaper price point? Why can't we partner at the how level to develop much stronger propositions to the market? So in my mind, one, it's a sponsorship. Two, it's the culture of teaming and innovation. Innovation isn't a one-day exercise, it's a commitment to a new way of working. And when we start to get over ourselves, we start to see insights and patterns that we never saw before. When you bring together data sets that were never commonplace, HR, finance, operations, patterns emerge that tell us how to run the business in new ways, and we'll become a lot more agile.
I want to challenge you on that one, because even each of you here on the panel come from large organizations, structured corporate firms as well, which have processes and manners within which to do this. So if we're calling for this additional element of teamwork, different thinking, and getting over ourselves and understanding that there's a greater cause and purpose that we need to serve here, how do we change the mindsets but still maintaining the level of structure and control without closing up the society?
Well, maybe I can start. I guess we call this a multi-mode organization or a two-speed organization. Clearly, there's certain things we do as organizations, whether it be private sector, consulting groups, or whatever the entity is. But we need to be multi-speed. In one regard, we need to do what we've always done in as efficient a way as possible, using automation, using industrialization. In other regards, we need to be a lot more agile and responsive. So organizations like those represented here today, we mostly have a two-speed organization. One that allows us to be responsive. As customer needs change, we can respond very quickly, while bringing up the rear by changing slowly but surely the bigger operational engine. But being responsive to changing needs makes us relevant. In a time where our clients and our organizations have options from a competition perspective, they could easily swap overnight. So it's the ability to be responsive, to hear, to listen, and to respond that makes us relevant.
And I think the other thing that brings in a lot of people's willingness to change and to take some of those risks involved with any change is to actually create an environment for them where they can start seeing the benefits of what it is that they're doing. If you speak to a lot of people within the accounting space, they always feel that by the time they get the information, by the time it's actually made available to them on Workday 22, or perhaps even as late as Workday 30, it's too late for them to make any significant changes on what does it really mean. So if you can explain to them the benefits of saying, well, look, if you do start bringing in ways of getting that information to make it available earlier, so that you have the information when there's still time to take action that could be relevant. It's very often is received once it's just too late to make any significant change.
I'd like to add to Lee's comment, and you referred to the two-speed mode of operation. But I'm even pushing organizations further in saying you need to find mechanisms to, it's a multi-speed organization that you need to build. And your question, Gugu, around the controls and the structured nature, I think the one thing we find is in the analytics environment, it's all about that, finding that balance between being agile and being controlled. And understanding that not every requirement requires the same level of control or the same level of agility. And that really drives you to a point where you start to realize that as an organization, you need to have the ability to move across that continuum on an ongoing basis and understand the need and qualify quickly whether that specific need is about control or about agility or somewhere on that continuum, and then being able to respond accordingly. So build your systems, your processes, your technology and your people in such a way that you can actually start to move across that continuum on a more regular basis.
Easy though is it to implement such a structure, and again adapting the mindset and thinking of individuals within the organization to that level of flexibility, but understanding how to differentiate between the two? Johan?
I think it's easier than we think and harder than we think in a way. So where it works is where it encourages the natural curiosity of the people, and they get engaged in the agility side of things, and they can see the outcomes and the exciting developments coming out of that side. The problem is the majority of organizations are very fixed and controlled environments for specific reasons. I mean, you've got a lot of legislation, you've got regulation on top of that. That forces them into a very controlled mindset. But I think the moment they see the green shoots coming out of this agile environment, where all of a sudden it shows them things they didn't even think of before, they adopt a lot quicker.
I want to go ahead.
I think we always talk about the digital disruption, but up to the point that you don't start making the organization aware of that, and I think that's where analytics on the one side also comes in, is that we continuously need to challenge the status quo. So we need to start thinking more entrepreneurial, and so by creating entities within the organization that can start generating those insights, almost a fiercest type of competitor sort of questioning, it does start asking the questions to the rest of the organization. So then in terms of approaches like agile, all of those different things, you can start driving change. It's not an easy journey, but at least you just need to get people to at least see that change is coming, and that they need to work towards that.
You mentioned a critical element there, which is that entrepreneurial thinking, which isn't something that many individuals are certainly blessed with. But again, coming back to the management accounting structure and even other critical and key individuals within organizations, can you actually upskill individuals to start thinking in that manner? Can you see a skills exchange as well from individuals who are entrepreneurial in their thinking in trying to address this mindset issue with those who aren't? And what about the generational and even cultural and gender influences, where for some people it's not that easy for them to be assertive and unbiased in some of their views and opinions when analyzing data?
Well,
go ahead then.
I think the same way that you've got to be working at two different speeds, you have to recognize that both types of people actually do have value within the organization. So certainly not everybody in the organization can become an entrepreneur. You do need people who are prepared to be the followers and make sure, they say if you want to start a movement, you can't underestimate the role of that first follower. So you have to have the people that are being the entrepreneurs that are driving it through, and then people that are prepared to follow them and actually see it through to the end and make sure that it gets properly embedded within your organizations. But when it comes to how do you spark and how do you make sure that the people that do have that entrepreneurial leaning can be brought to the fore, I think a lot of it is around what kind of forums do you have in your organization where people can actually speak out, perhaps outside of their standard organizational structure, so that the voices can be heard. And then how do you make people aware of the correlations that they're seeing within that data? So if you can show those correlations that can be turned into business value, and create ways of getting people to feel excited about that potential for utilizing those correlations, I think that's where you start sparking the entrepreneurial spirit and entrepreneurial thinking.
So maybe two concepts. The first concept, when you think about the way work gets done, we're moving to what we call an outcomes economy, where the focus should be on what you do versus how you do it. And a correlating trend in HR is something we call talent follows the work and work follows the talent. And that's interesting because the way we've done work could fundamentally change. Why do I need to see you to know that the work is being done? If I move from outputs to outcomes, I could be anywhere in the world. I could be in the townships, working hand in glove with an established corporate. The question is, how do we promote that way of working? And I'll go back to the point about sponsorship. If there's sponsorship to a new way of working, and we find a way to tap in to these entrepreneurs, tap into the township economy, when we have unemployment north of 26%, we're going to find a way to partner. The second question you asked was on how do we upskill? Now, what's fundamentally changed is that as accountants and scientists and applied mathematicians, we all went to university and had structured education. But today, if I told you, Google, you had to learn design thinking or learn advanced analytics, you can acquire those skills in a whole different way. You could use what we call online-based training, or what we call MOOCs, massive open online courses. We can suddenly acquire these skills in your own time. Now, if you were told that your very skill set's irrelevant, and if you put in the effort to acquire new skills, what I can tell you today is that those skills are available, the knowledge is available, but you need to meet your employer halfway to acquire what you don't have to drive your own job relevance. So the onus can't always be on the employer for management accountants. What are we doing to drive our own upskilling, to drive our own relevance as we move to an insights-based management accountant?
Very true. Fiona, you wanted to add?
Yeah, what's very interesting for me, and you mentioned the millennials. Now, the reality is millennials are not yet running the large corporates, and that would probably change soon. But the single biggest challenge that I find is that it's not necessarily about learning new skills, it's about unlearning old skills. Because this is a new way of work, exactly as Lee has mentioned. The world is changing around us. And the most difficult thing I certainly see is for the Generation Xers, like myself, to unlearn the things we believe is the right way of doing things. And that's often the biggest barrier to adopting these new ways of work, these new methods, new techniques, new technologies.
What about if I actually spoke in confidence of the Generation X's and said, but perhaps you've got the added advantage of further wisdom and understanding, and making reference to past events, and that might enable you to analyze the data more efficiently because of the level of experience that you have. Would that not also play an element, or does there need to be some kind of exchange here between the different generations too?
I think, if you start looking at idea creation and all of those things, I think the younger generations are absolutely exceptional when it comes to that. So many new ideas, many new thoughts and all of that. I think what we as Generation X bring is a bit of how do we actually start generating value from that. So there is, again, that element of control structure that we actually bring to it, that we can contain it and drive it through absolutely to value.
And I think it's very important as well to understand that what exactly are you automating. So you can have a fairly sophisticated analytics environment that will give you correlations across variables that you wouldn't have thought of seeing before. But I think what the Generation X's bring with the experience that they have is actually being able to understand what of these correlations are irrelevant anomalies versus what is actually causation. So what is the starting point? What is the trigger that's starting this conversation? And that also speaks to the way that we actually have to work, in that it isn't enough to say, well, it's fully automated. The same way that you can waste time by not automating functions that should be automating, you can end up making some very bad decisions if you automate a decision that should have had a human element brought into it, and some experience as far as, is that really what you would have expected the data to show you. I'm
happy for us to also draw on some of the experiences within your own organizations, especially given the reach and scale of these entities. But as you mentioned, obviously data needs to be reliable, it needs to be measured to ensure as well that we can see and pick up on the patterns that you alluded to here as well, Lee. How critical then is the consistency of the human element that's been placed to analyze this data? Johan, is that a vulnerable element where, depending on the level of staff turnover within an institution, the level of training or enhancement on this training, or restructurings that might take place, could that jeopardize the quality of the analysis of the data?
Certainly, yes. I think a lot of corporates are finding that there's very high turnover, and therefore you lose a lot of your corporate memory. Thankfully, there's lots of consulting houses. The processes are becoming a lot more similar across the industries, and the industries are converging. So it's not like any of the industries are that unique these days that the issues faced in that industry can't be solved by solutions created in other industries. But upskilling the people, I think, is a challenge, and it's one of the more difficult things because the incentive isn't clear from day one. People are used to doing their work in a certain way. Now you're trying to encourage them to look at it differently, do different things, and they can't necessarily see how that would benefit them immediately.
So again, moving to that incentive model.
Yeah.
Philip?
I think if we had to put a baseline that everybody runs on the same data, same analytics tool sets, it's always going to be about the judgment, the interpretation, and then the action that's going to make it unique. And that's what's going to drive uniqueness in terms of business models and all of that. And no person is exactly the same. I think therefore as well, businesses will most probably still differentiate on how they actually use the data and drive that to outcomes. So currently, obviously, the level of adoption is going to determine who's going to lead and who's going to lag. But eventually, as this mature, it is always going to require that human element, ultimately.
I was going to make the point, Gugu, that from an analytics perspective, all industries, including analytics, is becoming commoditized. So in many cases, we now have access to what we call elastic infrastructure. All the large telcos suddenly have data centers. Suddenly, your ability to jump into the big data bandwagon, the barrier is much lower. Secondly, the questions that clients ask us as professional services organizations, whether it's churn, turnover, customer acquisition, these questions and the algorithms that underpin them are actually quite commonplace and have become industrialized. So like I mentioned earlier, there are many things that one can do to start to take the hard work out of insights. And to your point earlier, what the management accountant needs to do is at the very, very top, distilling what he takes forward into the organization. But the reality is that in the world we live in right now, there are many things that actually become automated and industrialized.
Werner, you just wanted to add a point before we go to break?
I would like to challenge the thinking, or at least present an alternative view that there's also benefit in turnover of key people and staff, because a fresh perspective often brings fresh insight. And of course that's also where while the technologies and the methods and the tools are certainly commoditized, that different perspective that you bring on what you see is often what leads to the new insight. And then lastly, for me, the most important thing is not the insight only, it's the ability to execute on that insight, which is probably the single biggest shortfall. And that's the real competitive advantage, because we often come to the same insight across different organizations. The one who executes first and executes best is probably the one that will win.
Well, we'll certainly continue on the element regarding execution, which is quite important and imperative, and of course delving into the role of management accountants within their respective institutions. We'll continue with the CGMA Dialogue Series right after the break. Well, a warm welcome back to this edition of the CGMA Management Accounting Series. And still with me in studio, I have Beth McGuinness from IQ Business, Lee Knight from Accenture Digital South Africa, Johan Pretorius from MTN, Philip Hatting from PwC SubSaharan Africa, and Werner Swanepoel from Deloitte Analytics Africa. Well, just before the ad break, we did delve into the element with regard to execution. And this naturally brings us to the important element and ever-increasing role that those within financial services or the financial division of institutions play a critical role in leading the direction and steering the ship strategically and otherwise of these organizations. Coming back to management accountants, and I'm happy for you to make reference to those who are in your institutions regarding the level of thinking and adaptation, using the human element here, and most importantly, executing on some of the analysis that they've made. Is this a theme that is rising within the organizations that you see internally? Let's start with you, Philip.
I think the level of adoption is definitely increasing in terms of organizations where you're seeing analytics capabilities being established within finance functions in itself. I think in terms of if we look at financial reporting and management accounts, in many instances being one directional, it needs to start looking at the broader ecosystems in terms of aspects of sustainability and all of that. So I think there's still a long way to go, but it's also in terms of the information that's being presented, how much is it aligned to the strategic objectives of the organization, and are we actually reporting in alignment to that key decisions can be made. So it's not just purely financial, but it's actually looking at the broader performance criteria of the organization.
Lee, you wanted to add, Beth? Oli?
After you do.
Right. So I guess if you look back at management accountants, before we change to the new way of working, something's got to give. And one of the things we talk about is integrated business services. So we talk about transactional back office services. And there's clearly a need to move away from a language that accountants understand to a language that business understands. And integrated business services is a way to serve up knowledge and insights to business in a way that is understood. Earlier we spoke about a common language framework. In many regards, if accountants can't talk to the business, we don't have a common language to take us forward. So in many regards, if we don't adopt some of these newer ways of working, we can't free up ourselves to drive these new insights. So that's an important point. The second thing is, once you've got these integrated business services or transactional services in play, then you can start to have the management accountant try out new things. But ultimately, the management accountant as we go forward will be Mr. Analytics, in my view, be Mr. Control Tower, Miss Control Tower, which almost has the opportunity to guide the direction of the organization. Now, there will be a battle going on between the CFO, CMO, COO as to who controls the leadership. In my opinion, the CFO, the management accountant, has a very clear role into steering the organization. We come from understanding insights, and as Philip says, we always knew the numbers. But if we add the business context, suddenly we're well positioned to steer or add steerage to the organization as we go forward.
On that note, though, I do also want us to get commentary with regard to the ever-growing role and importance of the Chief Financial Officer within institutions. And in a moment, we will be getting representation from Mr. John Wendell, who joins us as a Global Chief Financial Officer of CIMA. So we will get your perspective very briefly. But on that element, you say that we shouldn't just communicate in numbers from a management accountant's point of view. Then how do we need to ensure that they go from speaking accounting to speaking business? And can we measure and set a standard perhaps for the method in which they communicate, which hopefully will be more than just spreadsheets?
So I think one of the things that we are definitely seeing in the way that the information is actually presented back is, first off, if you go back, accounting packs are big, they're complicated. There's a lot of individual pieces of information that are shared on those reports. What we're really starting to see is people are looking at the information they're getting and saying, how do we simplify it? When I get this 100-page pack that tells me all of my numbers across the organization, which 5 am I using to actually guide my decisions? And you're seeing organizations really streamlining the number of factors that they use to make decisions on, and actually throwing away a lot of the less relevant sets of information so that they can focus on key metrics that are commonly understood across your accounting team as well as across your finance team. And they may be quite complicated in the way that they've sourced information from multiple different sources, but the key decisions are being made by 5, maybe 6 different levers in most of your organizations. And the focus becomes on picking the right levers that are actually changing the direction of your business versus what is just an irrelevant shift in temporary numbers.
Philip?
I think we're seeing more and more highly effective finance functions are moving towards business partner models where they, in essence, taking out a management accountant or an accountant in order to work with business and engage with business in terms of the insights. What that requires for them to challenge across the supply chain, it's not just about the financial metric, it's actually how does all of these other operational metric then feeds into financial result. And that's quite a critical role. Within that finance business partner role, it is to create value through that engagement with business. So it's not just the one-dimensional aspect, but it's actually working with business in order to derive the value from that level of engagement.
Going back to that, again, does it mean that perhaps management accountants need to ask the right questions? Are they asking the right questions firstly? Do they need to ask them differently perhaps? And is it sector specific? Because I'd imagine for a FMCG firm versus a telecoms operator or financial services institution, the objectives and end game is actually quite different.
Yeah.
Johan, before we come to Werner for an opinion?
Yes, I think it is what questions we're asking that drives the answers we get. And I think it's also, instead of basing the questions on your experience and your background and your bias, to rather ask more open-ended questions which could lead to the insights. So instead of just asking why is this number what it is or what changed from last month, it's more around we've noticed a change, what could have influenced it, what can we do to change it going forward. So I think it's asking broader questions.
Werner, would you agree before we come to Lee?
Yeah, but I think, firstly, I think for the management accountant, it's a hugely exciting time because the world that's changing is creating opportunities for the profession to start to play a fundamentally different role, which leads to a number of the questions in terms of do we need a new skill set? Do we need a different frame of mind? So the question around, do we need industry-specific expertise? Absolutely. Because as the management accountant asking those questions, those open-ended questions, and we often refer to them as crunchy questions. It's not about the mundane questions. It's about asking those really crunchy questions. One of the biggest challenges is you need a combination of skills. You need a combination of capabilities. So not only do you need the finance skill, not only do you need the ability to crunch the numbers, not only do you need the ability to present it in some meaningful format, you certainly also need the business context and the experience of how the business works. Now, as a management accountant, you are ideally positioned to really see the big picture and really start to influence the thinking and the way that the organization goes about dealing with information. But you will not succeed if you do not start to develop those multifaceted skills, the business insight, the analytical experience, because you also need to be able to analyze the data and then the ability to actually work with the data and the tools that are available.
So those are the elements you'd want on the CV of a management accountant that you would have to hire?
Most definitely.
And I think, to build on that point and to go back to a point you made earlier about how it's also about what skills do you need to unlearn to do it. I think one of the things that Excel, which is by far the most common way of sharing information around an organization, has unfortunately taught people is that information is flat, it's two-dimensional. You have your rows, you have your columns, and you can put the odd pivot on it, but fundamentally you are limited to those two dimensions in the way that you understand and interpret your information. It's about unlearning that flat world that exists within the Excel environment and starting to look at, well, what can we do by bringing in some of these analytical engines that create the n-dimensional structure of bringing in those additional factors, bringing in information from externally, bringing in your behavioral and your operational metrics, your customer trends. So what trends are happening in your customer markets and your competitors? How do you make all of that information available? And really the flat structures that I think people have been used to receiving the information in start falling flat within that. So they have to break that heavy reliance on those spreadsheets.
An open question to each of you. Do you have a direct relationship, a working relationship with your management accountants within your entities, which results in not only an open exchange of information, but execution of the results of these findings?
Absolutely. In my organization, we've seen the accountants take a lot more time to learn the business. Now, before you acquire new skills, can you understand the language that I talk as a business leader? So I've seen a clear move from accountants to learn the language of the business. So as Beth said, to give it flavor and to give it the crunchiness that Werner alluded to, let's talk the right language. And I see a lot more conversations, less about the numbers, and like Beth said earlier, choose the 4 or 5 key metrics and then have the conversation on what to do about those metrics. So I think I've seen a clear evolution. I do want to make a point, it does sound a little bit crazy, but I see the finance function evolving. I will see more analytics people for sure, but I'll see people that do psychology, people that understand the psychography of the human mind, design thinking skills. Suddenly you have a whole team that doesn't feel like accounting in the accounting function.
On that note, I'd like us to get that perspective from the Global Chief Financial Officer of CMA. I do understand you don't have a mic, sir, but I do understand it is making its way to you. Right behind you, that's Mr. John Wendell, who's joining us from London, came into South Africa. I hope the weather's been treating you well. But on a separate note, we're talking about these financial leaders in the future, and as you hear, analytical thinkers, psychology perhaps being thrown in there, but a different method to the thinking which is required to the ever-evolving role of chief financial officers in the future. What's your observation on this, especially given the fact that you come from a global perspective where you can give us a view on how the landscape is changing and if it is evolving fast enough, especially in emerging markets like South Africa?
I could sort of start by reiterating everything the panel said, because the insights that you have given us are really top of mind and very much part of the CFO's life and the things that he or she is thinking about. Really, the CFO is a member of the board, whilst historically control frameworks and control structures have been a significant part of the role. What is very much now at the forefront is perhaps the chief investment officer side of the role. So it's the person who is working with the board in the development of their strategy, but also in the way that it's deployed and the way that resources are allocated to the strategic objectives and initiatives that the board is wanting to pursue. And then through performance management and through the data and the analytics, being able to guide and direct the board as to where the biggest bang for the buck is, where the best return is. And the return clearly comes from customers. So knowing your customers and knowing from the customer right through the organization what's going on and what needs to happen gives you then the basis upon which to advise and to guide and to make the right decisions. And so increasingly the CFO, the management accountant, as the panel has said, needs to not only fully understand the business throughout the whole value chain of the business, but to also be able to understand which parts of the data, the analytics, the information are relevant to making the right decisions.
Mm-hmm. On that note, you mentioned something quite critical, and thank you so much for sharing your feedback with us and joining us today. I want to, Werner, you mentioned execution. And as John has alluded to, we need to see the results, and naturally that's translated in the customer base or end user which we serve. From your independent institutions, where you've taken the feedback of the management accountant, you've executed some of the suggestions that have been implemented, have we seen a direct correlation between adequate analysis of the data translating into a better end use for the consumer, and as a result, increased financial performance of the entity you serve? Philip?
I think one of the comments raised was specifically in terms of long-term capital investments, which is obviously with a changing landscape actually quite critical, that you need to understand how that's going to evolve over time before you make that investment. So we've certainly seen where we've actually enhanced that decision-making process by leveraging off analytics to project a bit more in terms of how certain dynamics are going to change, that we can not just only inform it at a decision-making point, but actually evaluate it through the journey of that project as well, and then towards the outcome. And then you can start measuring that from an ROI perspective in terms of return. So I think that's the good part of having data and analytics, is that you can actually, through the journey, keep on evaluating the outcomes that are being achieved.
Exactly.
And I think that's one of the really key points that comes out of that as well. Is one of the key concepts about Agile is if you are going to fail fast. So not only using analytics to help inform your decision, but use them as well to decide when do you need to backtrack, making sure that information is always available. So right at the point of making the decision, you have to decide how are you going to be measuring it, even in the very early stages, so that if it does turn out to be a less than optimal decision, you can quickly readjust and refocus your business and perhaps get the best benefit out of the decisions you've made.
Google, it's probably worth noting that we should be clear that the CFO, the management accountant, isn't going to solve these crises by themselves. They've got a partner for success. So in many regards, having quantitative insights is really important. But what we find in the analytics world is combining that with the human emotion and understanding the customer and the products we take to market is equally as important. So yes, we understand the data from an insight and an inside perspective. When you combine it with the customer or the citizen perspective, suddenly we're able to change and evolve our business to drive our relevance. And it's an important point, because if you aren't using insights to change your strategy, by combining what you do now and what you need to do, you'll never evolve to drive your relevance.
Very true. Well, we do have about 10 more minutes before we do wrap up the conversation, and I do understand that we'll take questions from the floor. I've gotten direction that we'll take one question at a time, so I understand the microphone is with you, ma'am. If you could please share your name and title with us and the organization you're representing, and pose your question to the panel.
Good day, I'm Vivian Erasmus, COO of CMA Incorporated, an auditing firm. One of the key things that all of us have learned at university is relevance of data. How do we get our millennials, who is absolutely amazing at getting the data, but how do we get them to realize what is relevant for today and for now, especially in the range of organizations that we have? Thank you.
Thank you so much for your question. The microphone will move on to the next speaker. Anyone open to addressing that question?
I think, to go back down to there are certain things that data, you can tell what the correlations are. So you can understand exactly how your information is correlated and how it's moving things. But when it comes to actually interpreting what are the causations and how do you know what information to trust, I think that's when some of the years under the belt actually start helping. So it takes time. I think most people will say that some of the biggest learnings they've ever had have been from making mistakes, not from getting it right. So perhaps the best way for the millennials to learn is to give them a little bit of freedom to fail. But to fail in a safe environment, fail fast, and then from there they can take it, and eventually they will learn what is a correlation, what is a causation, and how to take more appropriate actions.
I think, from my end, how I normally challenge my team is basically two things. Number one is, what is the hypothesis? And even if we solve that hypothesis, what is the outcome? What is the value? And then you start driving it back into what data, what tools, analytical methods you use and apply in order to derive that.
It's important to recognize that millennials coming out of university won't have all the answers. So like Werner and Philip have said, give them a safe environment to learn, to tinker, not just to fail, but to work alongside more seasoned professionals. We assume too much and expect too much sometimes. Give them a room to bring the creativity they bring as millennials with Gen X, as Werner mentioned earlier. When you bring these things together, you'll have a lot more value.
Indeed. So increased partnerships again being highlighted here in the conversation. We're happy to take your questions, sir. If you could please tell us which organization you're from.
Strategic Implementation Advisor and Executive Coach for Ethos Predictive Intelligence. As you can gather from my background, this is a hot subject for me, and I hopefully make a lot of money out of it. But one of the things that I've come across in my travels globally as ex-president of CIMA is this human element, and I think this is really critical. Management accountants do not sit behind a desk analysing numbers any longer. They have got to be out there in the operations. They're the eyes and ears and finance in the business itself. And I'm glad I heard the word business model. If you want to really go at this game, you have to understand the business model. And it's not the same in most industries. I've worked in almost every sector of industry, public and private. And it really is that human element. Management accountants are a different breed in themselves. Finance functions are not shrinking. They are staying the same, they're just dispersing out there in the business. Real-time analytics. This is also another hotspot. What is your view on real-time analytics?
Thank you so much for your question, sir.
So I think the real-time analytics world is rapidly evolving, and it links to a number of the comments Lee's made before as well. So we're absolutely moving at a much more rapid pace nowadays. We use the term right-time analytics rather than real-time, because not every requirement is a real-time requirement. It's absolutely about having the right information at the right time. Now, having said that, there are certainly areas of businesses and some industries more than others where real-time analytics can have a fundamental impact and be of significant value to the business. And where those business problems exist, where real-time information and real-time analytics will have the ability, we certainly see an evolution towards that. More and more capabilities. The technologies are certainly also evolving to enable that. The question I would always ask is, in a real-time world, you will be gathering significant volumes of data. Do you know what to do with that? Do you know how to treat that? And it comes back to that same old question. It's the so what question. So what will I do with it once I have it? And if you have the ability to respond in real time, then absolutely go for real-time analytics.
I agree. One of the key things we didn't talk about today is something called IoT, the Internet of Things. And the reality is that we are able to tap into sensors in our personal life, whether it's a Pebble or an Apple Watch, as well as sensors in equipment and the plants that we run in our organizations. And like Werner's rightly said, what is the question, what is the KPI you need information on? Now, the one thing about real-time analytics worth noting is that your ability to tap into real-time analytics is a lot easier than it was 10 years ago. It's because industry has come to the party and provided these big infrastructures to make it possible. So once again, it comes to the point of partnerships. Are we partnering with the right organizations to access their balance sheets, access their expertise? Because we've got the problem, but how do we solve it? And my experience most recently was when they partner, you're able to get closer to real-time analytics or right-time analytics than you ever have, only if you partner.
We'll take one more question from the floor and then get perspective from our panel of experts. You can go ahead, sir.
I'm Francois de Toy. I'm interested in the role of the CFO in high-level strategy, especially corporate strategy. A lot of the insights are gained in collecting the data and analyzing the data, but the decision doesn't reside at the collection levels. It resides higher up. How do you suggest we transfer those insights from the management levels that collect and analyze the data to the senior corporate levels, where these decisions are then actually made, because that's where the insight is important.
Thank you so much for your question, sir. Anyone keen to respond?
Well, from my perspective, one of the things I've seen happen most recently is CFOs stepping up and saying, I want to be on that ExCo and I want to share my perspective in that common language. So I think the point you made earlier today was that accountants have an ability to give us a good perspective if they understand the common language. So I think every one of us, whether we're the CIO, CMO or CFO, are equally able to do it. It's the language we talk about. Ultimately, for you to get recognition at an ExCo or a board, you've got to talk the right language and in the quickest amount of time possible. So I think CFOs and management accountants generally are all able to. They should get the language right and put the effort into learn the language that the board speaks.
I would like to add to that in that, so I think many CFOs are now actually starting to take the lead. So it's no longer about a person collecting and analyzing the data and then having to communicate that upwards. We often see that it's actually starting to change and being pushed downwards. So CFOs taking the lead, saying, I need the insight, I need this analysis to be done, and often they do it themselves. So, and I think as the millennials move through, we will see more and more CFOs having the ability to be much more hands-on. At the same time, one of the biggest frustrations of this so-called species data scientists, that Harvard called this the sexiest job of the 21st century, is when we employ these very capable and very expensive resources, but we don't open up the channels. So they come up with the most amazing insights, but the channels aren't created for them to action those insights. And that's one of the single biggest frustrations, is the inability to action, the inability to execute. So it's certainly in the interest of the CFO and every other executive in the organization, if they're serious about insights and analytics, to open those channels and make sure that there's a free flow of insights and ideas and the ability to execute.
And I think, in addition to the data scientists who have all of that insight, I think it's very important for the CFOs to start looking at what is your data lineage, where is your information coming from, what rules are being made and what changes are being made to that data as it moves through your organization. Because it is correct, a lot of the decisions are made at that level, and I think what keeps most of the CFOs up at night is where do you have a developer somewhere who's making a decision on what data to include in an extract that is having a significant impact on the numbers on the other side when they pop out of the chain, and how do you make those decisions that are being made across really what can be quite a long value chain, how do you make them visible to the people that are using the end information as part of their decision-making cycle?
Yeah, maybe just to add to that, I think the agenda for the CFO is a lot about shareholder value and how you're going to, within the changing ecosystem where there's different forces impacting on that, is how you're going to start looking and measuring and you almost take that foresight view as to what is potentially going to impact, and that you can actually leverage analytics for. And it's engaging more in those conversations that I think is really where the value is going to sit for the CFO.
Perfect. I'm happy that you've responded adequately to the questions that have been posed by the audience. But as we do start to draw this conversation to a close and getting your closing remarks on some of the critical elements that are involved, a twofold question. One would assume that there must be a lot of capital investment required to implement some of these changes within organizations. Perhaps if we could address that, and more importantly, change doesn't necessarily take overnight or happen overnight, and the results might take a certain amount of period before they do translate into numbers or tangible customer experience or whichever metrics it is that the organizations are looking out for. Your closing remarks, incorporating these elements and other elements that we haven't touched on regarding the changing mindset and human element of chartered global management accountants. Werner, let's start with you.
So I would suggest one start small and find those specific opportunities in the business where the value is real and tangible, and essentially make your analytics road journey fund itself. And that is the winning recipe to execute ultimately, and it's certainly in the long term also the best possible way to secure the funding that you require.
Philip?
I think just linked to that is that organizations need to see it as that they need to be a data-enabled organization. They need to understand that data is an asset that they need to leverage in the right way, bring it to those key decision points, but then also have the culture to change with that and to leverage that. I think once that's done, and again the process could be that it's a step process, proving value as you continue, but it's critical that organizations need to start maturing from that perspective.
Johan?
Well, I fully agree. I think starting small will surely prove the point up front. But it's also a matter of companies, either they change or they stagnate. I don't think there's an option anymore. So either you're data enabled or your competitors will run you into the ground. So yeah.
Lee?
I think from a CapEx versus OpEx perspective, I think the CFO and the accountant has many more options than they've ever had before. People are willing to go out and risk and help you to fast track realization of value. So like you said earlier, the question was, how quickly does it take? It depends. Will you do it yourself? Will you build up skills you can't acquire today? Or will you partner with organizations that can do it much quicker? And many things today, you can do it much quicker if you partner. My final thought is something we call digital quotient. Does your leadership understand what digital is? So yes, we're talking about data and insights, but does that CEO really get it? And the question is, will the CFO take the time to educate the rest of the board or the exco on the power of data and insight? Because if you don't talk to them about the power of insight and show them why they should care, and they won't care. And if they don't care, then you'll never get the sponsorship you need to drive this point in execution.
Beth?
I think really what you're looking for, and I mean it has to go back to Vanna's original point of start small. Don't try and boil the ocean and solve everybody's problems all at once. And focus on building small cross-functional teams that can move across various different areas of the organization that need a team to work on it and be able to pull together the various different technology, financial and business knowledge. Pull that all together and actually use it to deliver insights. And then once you've had those first small successes, allow them to become your champions to the rest of your organization. So slowly you start in the easy areas, build up to harder and more difficult cases to win over. So eventually you have business people convincing business people that this is the way to go, and accountants convincing accountants this is the way to go. You're not trying to sell them something from an external language. Use those success stories to prove your case and to increase your momentum.
Indeed. Thank you so much to each of our panelists for your phenomenal insight on the ever-evolving role of management accountants, and of course our audience as well for posing their questions and sharing their views with us today. Well, that's a wrap of this episode of the CGMA Management Accounting Series. A big thank you once more to my guests, Beth McGuinness, who's an associate partner at IQ Business, Lineage, Managing Director of Accenture Digital South Africa, Johan Pretorius, Business Intelligence Lead at MTN, Philip Hatting, Partner leading Data and Analytics for PwC SubSaharan Africa, and Verna Swanepoel, Director and Business Arena Leader, Deloitte Analytics Africa. From myself and the team, it's been a pleasure being with you today. Join us again next time.